Good morning and welcome. You're watching Market Cafe on ET Now. I'm Nupur and joining me is Meryl. Over the next half hour, we track what's happening in the global markets and we also bring you how it's likely to impact the opening of the Indian markets. We begin with a look at how the US is doing, and currently stock futures, of course, seem to have fallen slightly on Sunday night as traders are looking to recover from a losing week that has been sparked by a sharp jump in Treasury yields. Now, the Dow last week fell about 0.8%, marking its second consecutive weekly pullback. The S&P 500 and the Nasdaq also have shed close to 1.4 and 2%, snapping their three-week winning streaks. Now, stocks, of course, have also been pressured by the rising bond yields around the globe. Now, looking at the 30-year US Treasury bond yield that stopped about 5.3% last week to reach levels that have not been seen in nearly 20 years. And rates in Japan, France and Germany are also scaling to multi-year highs. Investors, of course, are also growing increasingly more fearful about the US-Iran war. It does appear that it is continuing to linger on, keeping oil prices elevated and driving inflation higher.
Right. Now, moving on to take a look at what crude is doing. Oil prices are seeing quite a sharp pullback in early trade. Brent crude now has fallen almost 2%, giving up some of the gains after surging more than 5% over the past 2 weeks. WTI crude is also down close to 2% right now, trading around that $85 a barrel mark. Now, this decline comes amid some profit-taking seen after the recent rally. This is even as markets remain focused on the risk of tighter US sanctions on Iran and potential supply disruptions coming in as well. The US is expected to announce its strictest ever round of sanctions on Iran, with US Treasury Secretary Scott Bessent warning of an economic D-Day for Iran. Let's take a look at what gold is doing as well. Meanwhile, gold continues to remain firm. Spot gold touched around $4,640. That's the high that it touched, making its third consecutive weekly gains, also supported by concerns around sovereign risk. Moving to the Asian markets then, markets are seeing quite a mixed start. Japan's Nikkei has opened lower by around 0.3%, but has since recovered. It's trading quite flat since then. South Korea's Kospi also remained under pressure, down about 1.5%. Investors are also going to be keeping an eye on US-Canada's trade tension and several major global catalysts lined up for this week. Let's take a look at what India markets are looking like then. The GIFT Nifty has implied a sort of a positive start in early trade, but it's going to be important to see how that plays out and if those levels are able to be sustained in trade. Especially on the oil-sensitive sectors, that's going to be important to watch as well. The recovery coming in from the Asian markets and Nikkei specifically is also seem to be providing some support. Although weakness overall in the Asian markets, as well as the broader geopolitical uncertainty, do suggest that global sentiments and the Indian sentiments also are going to remain mixed.
All right, so moving on to the trade war that we are seeing between India and Canada. Well, Canada, of course, has suspended the trade deals with the US as last-minute terms and conditions by the US was stated to be unfair and uneconomic. The US has officially levied a 50% tariff on Canadian imports. And Sumita is here with more on this. So good morning, Sumita. It's not looking good between the two of them, is it?
That's right. Fresh tensions are brewing between the United States and Canada, and this on account of suspension of trade talks between both the sides. President Donald Trump has said on a post on Truth Social, he says that Canada wants the benefits of being a state without being one. In fact, this came up after 50% of tariffs were imposed by the United States on nearly $25 billion worth of goods and services. Mark Carney, in a detailed social media post, he said that he's ordered his trade team to return from the United States. And of course, he's announced the suspension of trade talks between both the sides. In fact, in that very post, he calls the US's demands excessive and uneconomic. He says that Canada will begin retaliatory measures on September 8th, and these are going to target the US's steel and dairy industries. And in fact, it was the last-minute change in the United States proposed terms that Carney has mentioned in his post. But perhaps that was the reason for the suspension of these talks. And he said that, these proposed terms Last-minute change in these terms, that was unfair, that was uneconomic, and that was unreliable. And America is altering all its trade relationships, is what the Canadian Prime Minister said. And in fact, he also announced that Canada is going to respond dollar to dollar. And remember, what's important and critical to note here is the fact that this breakdown of talks has happened just days after both the sides sounded optimistic of a trade deal between United States and Canada. So not only does this put into jeopardy the trade ties and, of course, the trade between both the sides, which touch $880 billion in 2025, but also the future of the USMCA agreement, which is now under question.
All this while, the US is preparing what Treasury Secretary Scott Bessent calls an economic D-Day against Iran, with the toughest sanctions in history expected to target Iran's trading partners. Bessent is also saying that the US will use its full economic might to force countries to stop doing business with Iran. But Iran has hit back with a major threat as well. If the economic war continues, it says not a single drop of oil will be exported from the Persian Gulf, including the Strait of Hormuz. The Treasury Secretary is scheduled to hold a press conference later tonight.
Now, Trump has disclosed more than 1,000 financial transactions for June, showing a broad reshuffling of his portfolio. His trades have totaled between $78 million and $263 million, with sales of $1 to $5 million each of Meta and Motorola, while buying Berkshire Hathaway, Visa, MasterCard, and Cintas in similar amounts. Now, he's also bought Home Depot, Fidelity, National and Treasury ETFs, while trading defense stocks, including Palantir, RTX, and Northrop Grumman.
Switching focus, fast fashion giant Shein is seeing a valuation of up to $27 billion in its Hong Kong IPO, a sharp 70% drop from its nearly $100 billion private market peak. Shein is offering 280 million shares, looking to raise as much as $1.7 billion, with the IPO price being finalized on the 31st of August. Shein is set to begin trading in Hong Kong on the 1st September.
Well, we slip into a very short break here on Market Cafe. When we return, we'll be taking a look at what's going to impact the India markets as they open later in the day. Do stay with us. Well, thank you very much for staying with us on ET Now. This is Market Cafe, a show where we take you through what's expected to impact the Indian markets later today. Now, the government has rolled out a major push for India's electronics manufacturing ecosystem, unveiling the mobile phone manufacturing scheme with a total incentive outlay of 62,000 crores for FY26 to FY31. And Ashesha is here with us to tell us more on this. So, morning, Ashesha. So, give us a sense of how this could really have an impact.
Well, yes, so the entire EMS sector will be in focus today after the government announced the Mobile Phone Manufacturing Scheme, or MPMS. Now, the total incentive outlay will stand at about 62,500 crores over the period of next 5 years from FY26 to FY31. The objective, of course, is to increase mobile phone manufacturing in India, boost exports, and increase use of Indian-made components that are used for manufacturing mobile phones. Now, other than that, the scheme also targets large-scale mobile manufacturers and EMS players, and there are specific targets to be achieved by these companies in order to become eligible for this particular incentive. Large-scale mobile manufacturers need at least 10,000 crores of FY26 revenue to be eligible for this incentive. Companies also need minimum incremental sales every year over a period of 5 years, FY26 to FY31. Now, other than that, the company will get incentive based on additional sales that are generated over this 5-year period. Now, the incentive ranges anywhere between 2.25 to 2.5%, and it will reduce gradually over the 5-year period. Now, Dixon Technologies clearly will be the biggest beneficiary of this scheme that the government has now rolled out. Other than that, Amber Enterprises is likely to be a potential beneficiary given that it has entered into a joint venture agreement for mobile phone manufacturing. Other than that, Syrma SGS, Keynes Technology, and PG Electroplast will be a couple of other players which will benefit as a result of this scheme.
Thank you, Ashesha, for taking us through that. And actually, let's take a look at what IT Minister Ashwini Vaishnaw had to say during the launch of this scheme.
Practically, mobile phone production cumulative, which was about 22 lakh crore, will be doubling in this period. It will go up to 40 lakh crore. That's a big thing. And as you know, last year, smartphone as a category, as a product, was the largest exported item out of India. That position will be retained, that position will be further strengthened. Electronics manufacturing became the third largest category. That will also get sustained now with all these initiatives. To have an Indian brand, we need the following inputs in it. First, Indian design. 2, that design has to be Indian owned. 3, the brand has to be Indian owned. 4, the manufacturing ecosystem. The manufacturing ecosystem is in place now already. That entire ecosystem is right now, we have it. Design, we have asked multiple players, to be precise, 3 players, to come up with design options. The challenge we have given them is, the design has to match the best in your segment. It cannot be a design which cannot compete with the best in your segment.
Now, in what is being seen as a big boost to mining companies, the government has amended the Mines and Minerals Development and Regulation Act to curb states from imposing multiple of fresh levies on mining. And in fact, Ashesha is back with us. Hi again, Ashesha. Now, explain to us what this means and more importantly, what does it mean for unpaid or unrecovered past levies?
So the Mines and Minerals Act has now been amended, and the objective of this amendment is to curb excess levies that were imposed by state governments on mining of several things. Now, mining currently faces several taxes, levies and charges which are being imposed by the state governments, because of which the taxes in fact are as high as 25%. Government says that the state's ability to impose levies has increased costs. It has hurt investment in mining. It has also discouraged long-term investment in mining. So that was clearly the problem. So now the amendment says that states cannot impose any new tax, cess or levy on mineral rights, mineral-bearing lands, or levies that are linked to mineral quantity or value or loyalty. State governments do not anymore have the power to impose any kind of levies on mining that is being done in those states. However, levies can only be imposed basis the framework that will be made by the central government in the due course of time. Now, as far as past demands are concerned, any kind of past demands that were accrued but not paid by the government will stand invalid, which means state governments will not have to pay those dues. But in cases where the state governments have already paid, no refund will be granted by the state governments. That is what the Amendment Act says. Now, the sectors that are likely to benefit, now remember, mining has in any case been in focus all through last week, ever since this was passed in the Lok and the Rajya Sabha on the 13th of August. But NMDC, GMDC and MOIL will continue to benefit because there will be more certainty and predictability with respect to taxation of mining. And other than that, they will also be able to increase investment in mining without any uncertainty of taxation. Other than that, all those sectors which consume products which are generated as a result of mining will also benefit. So for instance, we have steel, cement, aluminium, power and infrastructure as indirect beneficiaries of this Amendment Act, Mines and Minerals Amendment Act. So all in all, positive development not only for the mining sector but for other allied sectors as well which consume those products.
Okay, that's on the mining amendment from the center. But Ashesha, while we still have you on board, take us through some of the cues or the stocks which are going to be in focus today.
Well, yes, let's first start with NTPC Green Energy. The stock will be in focus on the back of an order where the subsidiary has won 500 megawatt capacity in an order, and the tender size stands at about 6,000 megawatts. So new order win that has come in for the company, which is why this counter will be in focus today. Diamond Power Infrastructure, again on the back of an order. The company has secured a letter of intent worth about 53 crore rupees, and this is from Orient Pro Solutions. Highway Infrastructure, they've won an NHAI project worth about 80 crore rupees. Not a big order, but nonetheless, this counter will be in focus on the back of this order win. Innova Captech, and a positive development with respect to capacity expansion plan has come through, where a 45 crore brownfield expansion has been approved. They will be adding new capacity as a result of this. This is likely to be executed over the next 18 to 22 month period and funded via internal accruals and bank securities. So yes, some capacity expansion plans, which is why Innova Captech will also be in focus today.
Okay, thank you, Ashesha, for that list. But there are a bunch of other stocks as well that we're expecting to see in focus. Starting first with Z Entertainment, a neutral-ish development on that front. The company has allotted fully convertible warrants to promoter group entity Sunbright Mauritius Investments. This is at the price of 126 rupees per warrant, and the promoter group has already paid 25% upfront, amounting to a 660 crore inflow that the company has just seen. Tega Industries is also in focus after the board of the company has approved a preferential allotment of shares to AP Jupiter Holdings. This is at a price of 1,994 per share. The transaction is seen to raise around 95 crores in terms of the payment that the company has received. Keynes Tech has gotten a positive trigger after signing a memorandum of understanding with Bosgam. This is an intelligent computing brand. This is to expand the company's presence in India's computing market, and the partnership will be leveraging Keynes's electronics design and manufacturing capabilities to localize products including mini PCs, laptops, tablets, and monitors as well. GHCL is another stock which is going to be in focus after the NGT Western Zone bench has dismissed all three appeals challenging the clearances for its greenfield soda ash project in Kutch, Gujarat, while Jubilant Pharmova has received USFDA's approval for commercializing batch manufacturing at this is at its first product on line 3, a new isolator-based fills and finish line. This is going to be strengthening the company's sterile, injectables and biopharma contract manufacturing capabilities. So all in all, these are some of the other stocks that we're also expecting to see in the spotlight today.
All right, moving on now. Sugar prices have increased in recent weeks from 48 rupees per kg on the 20th of July to about 55 rupees a kg. Now, the government is closely monitoring the situation and has taken a series of measures to ensure adequate availability of sugar and stable prices for consumers, while also clarifying now that the rise in sugar prices cannot be attributed to ethanol. Kuldeep now joins us to tell us more about the steps that the government is aiming to take. So, hi Kuldeep, take us through what we're expecting the government to do in terms of trying to control prices.
Well, amid the rising prices of sugar across the country, the government has come out with a statement. It clarified that adequate sugar stocks are available to meet domestic demand, and it also asserted that the government is committed to protect consumers. The government further stated that the sugar production for the current season is seen nearly 306 lakh metric ton, which is quite low as compared to the initial estimates of 343 lakh metric ton. The government also said that to ensure the availability of sugar, it has asked all the mills and state governments to start crushing from 15th of October, and this will raise sugar production by 10 lakh metric ton. The government further stated that it has taken a number of steps to ensure the availability of sugar and to control the prices. In fact, it has allowed duty-free import of 10 lakh metric ton sugar, and it has also passed an order which states that bulk consumers will not be permitted to hold sugar stocks for more than 15 days. So it has tightened the sugar stock holding limits. Additionally, the government has also asked all the chief secretaries and all the state governments, in fact, to conduct physical verification to ensure the compliance of this sugar stock limit order and take necessary action as per the Essential Commodities Act of 1955. The government has also clarified that diversion of sugar for the ethanol production is not the reason behind this rise in sugar prices. It in fact stated that the diversion of the share of sugar for the ethanol production has been reduced from 12% in 2022 and 23 to nearly 9% in 25-26. 2026. The government stated that it has been taking all the steps to ensure that the prices of sugar do not skyrocket. And in fact, if you talk about the prices, as per government data, the prices of sugar right now is 56 rupees per kg. That is on all India basis. However, as per the government data only, the prices of sugar has been seen nearly 64 rupees per kg in some states. So this has been the status of the sugar prices, and there has been more than 20% increase within a month in the prices of sugar.
Switching focus then, 3 IPOs are set to open for subscription today. These are Skyways Air Services, High-Tech Engineers, and Symbiotic Pharma Lab. Now, all 3 of these are tentatively slated to list on the 1st of September. But let's take a look at these companies individually as well. First up, Skyways Air Services is coming up with an IPO of around 583 crores. This is comprising of a 400 crore fresh issue and a 184 crore off of a sale component. The company is primarily an air freight forwarding and integrated logistics player, but importantly, over 75% of its air revenues come from air freight, and the company has been India's #1 air freight forwarder for the past 4 years. IPO proceeds from this will go towards debt repayment and also working capital. Next up is High-Tech Engineers, coming in with an IPO size of nearly 136 crores. This company manufactures hydraulic and pneumatic equipment, and the proceeds will be used largely for working capital as well as capacity expansion. Finally, Symbiotic Pharma Lab is coming in with the largest issue size of the 3. This is at 1,757 crores. It is a pharma CDMO and API manufacturer and specializes in corticosteroid APIs and also pharmaceutical ingredients. This issue includes a 150 crore fresh issue, and a substantial portion of it is actually an OFS standing at 1,607 crores, with proceeds earmarked mainly for debt repayment and general corporate purposes. All of these 3 IPOs are expected to open today for listing for subscription and will schedule to list on the 1st of September.
All right, so that's what you're going to be watching out for today and this week. Thank you very much for joining us. And up next, of course, is the market.